Okay, now let's apply everything you've learned in the previous lesson by going through some real-world examples. As you can see on the screen, we have a MACD oscillator at the bottom of the chart. We have three important lines here. The blue line is the MACD line, the orange line is the signal line, and the red line is the zero line. We had an uptrend signal here when the MACD line crossed above the signal line, and both lines were sloping up. This could tell us that the previous downtrend would end soon, and the price was going to go back up shortly. The trend reversed when the EMA 9 crossed above the EMA 20, and the uptrend signal was stronger when the MACD crossed above the zero line. As I've mentioned in the previous video, when the MACD is above the zero line, the EMA 9 is likely above the EMA 50. This shows us a stronger uptrend signal because the EMA 50 can act as a dynamic support that helps push the price up. You see, when the MACD crossed above the zero line, we also had the EMA 9 above the EMA 50. Now, I want you to take note of this. You had better use the MACD indicator as a way to identify trend reversals, not a way to determine when to buy or sell your coin. So, what do I mean by that? Similar to the parabolic SAR indicator, the MACD can show you many false buy and sell signals, if you don't know how to use it properly. You see, the MACD line crossed below the signal line several times here, but the trend was still going up. Why? Because the overall trend was still going up, the EMA 9 was above the EMA 20 and EMA 50, and we also had a support level at around 30,000 Satoshi. The trend could only reverse when the price could break down through this support level. So to avoid these false signals, you'll need to use the MACD along with a trend-following indicator like the exponential moving average. As you can see, the MACD could show us a faster sell signal than the exponential moving average. So whenever you see the MACD line crossing below the signal line, you should be wary because the trend can reverse shortly. And we'll use the EMA crossover strategy to confirm the next market direction. You see, the MACD line crossed below the signal line again here, and both lines started sloping down. By this time, the EMA 9 also crossed below the EMA 20, so we could easily predict that the price was going to drop soon. And when the price dropped below the support level, and the MACD crossed below the zero line, we could confirm that this was a strong downtrend. The trend reversed when the MACD line crossed above the signal line here. We could confirm the uptrend when the EMA 9 crossed above the EMA 20, and the uptrend signal was stronger when the MACD crossed above the zero line. As you can see on the chart, the price failed to break up through the support level at around 30,000 Satoshi. So this means that the old support now became a new resistance that prevented the price from rising up. So what I would do in this case is to wait for several days to see if the price could break up through that resistance. If it couldn't, it was likely that the trend was going to reverse. We had a stronger trend reversal signal when the MACD line crossed below the signal line here, and we could confirm that this was a strong downtrend when the EMA 9 crossed below the EMA 20 and the MACD line crossed below the zero line here. So by looking at this chart, you can easily predict if this coin is going up or down in value. And with this information, you can just buy low and then sell high. You can make a lot of money. Okay, now let's have a look at another example. As you can see on the screen, we had an uptrend signal here when the MACD line, or the blue line, crossed above the signal line, or the orange line. The EMA 9 also crossed above the EMA 20, and the MACD was above the zero line, so we could easily guess that this was a strong uptrend. Next, the MACD line crossed below the signal line, but the EMA 9 didn't cross below the EMA 20 yet, so we would need to be patient and wait for another signal. You see, we had a resistance level here at about 980 Satoshi, so we could guess that the trend would likely reverse, and in this case, you could sell your coin to protect your profit. The downtrend was confirmed when the EMA 9 crossed below the EMA 20. The trend reversed again when the MACD line crossed above the signal line, and the EMA 9 also crossed above the EMA 20, so we could confirm this was a valid uptrend. The uptrend signal was stronger when the MACD stayed above the zero line. Now, I want you to take note of this. The downtrend signal will be weaker when the MACD is above the zero line. That's because when the MACD is above the zero line, the EMA 9 is likely above the EMA 50 as well. So the EMA 50 can act as a dynamic support that helps push the price up. So that's why you see the MACD line crossed below the signal line here, but the trend was still going up. The MACD line crossed below the signal line again, but this time the MACD line crossed below the zero line as well. The EMA 9 also crossed below the EMA 20, so we could confirm that this was a strong downtrend. Next, the MACD line crossed above the signal line here, so this might tell us that the trend would reverse soon. And what I would do now in this case is to wait until the EMA 9 crosses above the EMA 20, and the MACD line also crosses above the zero line. And when that happens, I'll get in the market again and buy back this coin at a lower price. Okay, here's another example. Now that you're familiar with the MACD oscillator, let's analyze this chart quickly. You see, we had a strong downtrend signal here. The MACD line crossed below the signal line and the zero line. The EMA 9 also crossed below the EMA 20, and the EMA 50 was above the EMA 9 and EMA 20 as well. So, this was a strong downtrend. As you can see on the chart, the MACD line crossed above the signal line here, but the trend was still going down. So I want you to take note of this. The uptrend signal is weaker when the MACD is below the zero line. Why? It's because when the MACD is below the zero line, it's likely that the EMA 9 is also below the EMA 50. So chances are the EMA 50 can act as a dynamic resistance that can stop the price rising up. The EMA 9 crossed below the EMA 20 again here, so we knew that the price was going to drop further. Next, we had an uptrend signal here when the MACD line crossed above the signal line. The EMA 9 crossed above the EMA 20, and the MACD crossed above the zero line. So we could confirm that this was a strong uptrend. The trend reversed when the MACD line crossed below the signal line here. In addition, the EMA 9 crossed below the EMA 20, and the MACD crossed below the zero line. So this was a strong downtrend. The trend reversed again when the MACD line crossed above the signal line here. You see, the MACD also crossed above the zero line. The EMA 9 crossed above EMA 20. Both lines started sloping up. So this is a very good buying opportunity because we know that the price is going to go up in the next few days. Okay, now let's take another example. As you can see on the screen, we had a strong uptrend signal here. The MACD line crossed above the signal line and the zero line, and the EMA 9 crossed above the EMA 20. So in seeing these signals, we could easily predict that the price was going to go up. The trend reversed when the MACD line crossed below the signal line here. The EMA 9 also crossed below the EMA 20. The downtrend signal was stronger when the EMA 9 and EMA 20 crossed below the EMA 50, and the MACD line crossed below the zero line. We had another uptrend signal here when the MACD line crossed above the signal line again. The uptrend was confirmed when EMA 9 crossed above the EMA 20, and the MACD crossed above the zero line. We had a trend reversal signal here when the MACD line crossed below the signal line. The downtrend will be confirmed when the EMA 9 crosses below the EMA 20, and the MACD crosses below the zero line. So now you've learned everything you need to know about the MACD indicator. This indicator can show many false signals, so make sure you're using it with the exponential moving average and the parabolic SAR indicator to determine market trends.